Good morning, everyone. This is Jason. I hope this video finds you doing well. It is Wednesday, February the 20th, 2019. We're going to do a market analysis video just to take a look at the market, what's going on with price, what we think is going to happen, what has happened. Where this week we're 1 day short because the market opened yesterday, so I didn't make the video yesterday because I wanted to get another at least one close session in before we shot the video to kind of see what was happening for the week, so I can give you something new that would be different from the weekly review video that we did on Saturday. If you're new to the channel, please subscribe. If you're someone that already watches the videos, if you will, please give me some feedback. Let me know what's going on. Last week I got feedback that it would be better if the videos were shorter. I'm a person that really likes to go into detail about what I do, and it can be overboard at times. So if you guys prefer shorter videos, let me know. If you prefer longer videos, let me know. Kind of weighing that right now, and let's get into the market a little bit and see what we're looking at here. All right, so it's kind of a broken record. I say that every week, every video it seems. We're at resistance on a monthly level. If you zoom out the charts, and look at them from kind of a bird's eye view, we had this 20% drop here, that began basically in September, that culminated back on basically Christmas Eve. And we've been going straight up ever since. All right, so as I look at a daily chart, now this is the SPY, this is the S&P. So as I look at a daily chart, the angle of this up move, this is a time to mark demand line. So this is an uptrend line. It uses these last 2 points basically to determine the angle or the rate of the rise of the market, and that would be the demand. So you can see it's pretty vertical. And typically when it gets this vertical, you're getting really, really close to price punching through it and changing polarity on the market. And when you put the confluence of that you're at a resistance area, I'm still hesitant to buy anything up here. Now, I've been saying that since we had consolidation down here around 260, because we had weekly resistance at this level when price was first coming up. Now, since then, on the weekly chart, the polarity has changed to up. So there's support down here, but we ran into monthly resistance right behind it. So basically from 260 to 282 is basically a resistance zone, and the market's done nothing but go up. So for me, there just hasn't been a lot of opportunity to trade on the SPY. And there are a lot of other charts that trade individually that set up differently. Some of them are bullish, some of them are also bearish and have reached their resistance areas, reacted there, and there's been some type of reaction. But I will say there's been a general lack of follow through on all the short trades. Now, the way that I trade is I trade between support and resistance zones, so I'm typically out of my trade by the time the next support resistance is reached with a profit. So I've been able to trade some things within this upward momentum based move, but the follow through on the bearish side hasn't been there really on very many charts at all, to be perfectly honest with you, even though they have bearish indicators. So this S&P, which in turn makes you have a pretty slow month. I mean, this is the fewest trades I can remember having in a while. It's just, I'm just standing on the sidelines a lot. But here's something to look at. So this is the S&P. The red lines, if you're new to the channel, the red lines represent monthly resistance based how I define it. So this area typically is where markets turn and go back the other way. Now, it doesn't mean it's going to make a new low. It's just this is where the market turns, and this is how you get the opportunity to buy it at support. If the market's truly changed to bullish, this is the area where the buyers would re-enter and continue the move up. But typically there is some form of a retest, and we've had no retest at all, which is concerning. And the steepness of this line says to me that we're close to a change. The steepness of this line with where we are in the price is, it looks like it's set up for a change, but we'll find out in the next couple of days, I think. All right, so let's look at the QQQ, and similarly, let's expand this. Similarly, we're at the 61% retracement level on this chart as well. Historically, this is the area where price turns. Okay. Again, not necessarily to make a new low. Now, I personally believe that the market's going lower. All the other fundamental factors that are, with our economy, debt, credit, political unrest, the length of the bull run, weakening of the global economy, there's just earnings. It's just, there's a bunch of stuff. Everyone seems to be lowering guidance. It looks like it's setting up for the recession to start maybe next year or something like that. And I think, typically you never know what's coming until you're into it. So I think we've already began it in September. That's my thoughts. But, as far as how we trade this every day, big picture doesn't really come into play as much, except for knowing where the zones where the major money is going to jump in or jump out of the market. And I think that's where we're at now. This is an area where typically big money either jumps in short positions or jumps out of their long positions, causing the market to go short or bearish. So we're at the same level on the QQQ that we are on the S&P. And if you want to look at small caps on the Russell, same thing. There's a 61% retracement. Look where price is. So we're set up to be at that spot. But one thing I wanted to draw attention to, and this is somewhat of a math equation, but it makes a lot of sense just common sense wise. Okay, so it's a known fact that over 90% of the participants in the market lose their money. Trading is a zero-sum game. When you take a trade, there's someone on the opposite side of your trade that has an opposing view of the market than you. Now, they could be exiting their trade, and buyers become sellers when they exit their positions, but the reason that they're selling it because they may see the bearish activity on its way. So with that being said, if you're doing with what everybody or the majority of the market's doing, you're probably losing. And something that was really concerning to me is when we reach the weekly support, or I'm sorry, weekly resistance on the S&P, and that would have been in this area here back around mid to late January. One of the common things that I saw from a lot of people online, I saw it on CNBC, I saw it on Fox, was that, hey, we're at an area where the market's going to turn. It's very bearish, and I wouldn't buy here, and all these caution flags were thrown out. Well, for me, that was a caution flag, because if the general public are all looking for the market to turn, and the sentiment is this is just a retracement that we're going to sell back down, then the market doesn't work. Only 10% of the people in the market are pulling money out of it, less than 10%. So the majority, the sentiment needs to be that this is really a bullish market and people really need to buy before the carpet is pulled out underneath you. That's how the market works. 1 out of 10 people are making money. Everybody else is losing. So if the general consensus is that we're at a bearish area, then the market typically is not going to go bearish at that spot. It doesn't make any sense because there's too many people looking to go short. So what I'm seeing here is this continued upward movement but still within the range of the resistance is just a perfect setup for a bearish trap. That I've started to see the sentiment change. The run is starting. Stocks are going to have a new, high. I read an article yesterday talking about how this could be the biggest year for industrials, and it's just the sentiment is changing, and the money that doesn't predict the market or is more reactive to the market are probably starting to feel that way, and that extends into fund managers and larger term investors too. I mean, they're not always the smartest money. They have big money, but sometimes they're not the smartest money in the market, and a lot of them lose. And so individually they lose, not collectively, right? So as the sentiment is changing to bullish, the more fearful you should become for the bearish activity, especially given the zones that we're in. All right, so I'm still hands in my pockets on the sidelines looking for opportunities to go short when they present themselves, and I'm not buying in this zone. And my trading strategy was built on the fundamental idea that I buy as the market's going down and I sell as the market's going up. And that sounds crazy, but what you have to do is when you explore, you have to do a lot of research. And when you research price action and you lose the preconceived notion that you're not going to lose trades. You're going to lose. You're going to be wrong. And once you accept that, it's about probabilities. It's nothing but a math equation. You study the charts. You find the highest probable areas where you can be contrary to the market, but still, tweak your risk reward, money management, and your ratios so that you can win the trade. 50, 60, 70% of the time you'll be right, and that what you're risking versus what your reward is in such a ratio that you're going to make money over time. And so you can do what's contrary to the market. This is why a lot of the times you see that I don't use a lot of indicators, because indicators lag, and you have to have a competitive advantage in the market to trade effectively. And my competitive advantage, I feel, is I've studied price action so much that I enter my trades at levels that predicting short term where the market should go. Now there are triggers. I don't just jump in random, but there's triggers and rules to it. But it's somewhat predicting price movement in the short term based on longer time frame historical data, and it produces a winning strategy, and that's the edge. But if you don't have an edge, you're not going to win. And if you're doing what everyone else is doing or what they think is going to happen, you're probably losing, because 90% of the market loses their money. So if you're following the herd, you're going to be a part of the slaughter. That's just how it goes. So what I see in this market right now is the heavy potential for a turn. And as sentiment starts to grow and grow that this bullish activity is here to stay, that's just further confirmation to me that the bear trap is being set. Okay. Now, I could be wrong about that. In my opinion, is 100% liquid or fluid. If the market breaks way out of here, clears a new high, obviously the sentiment's going to turn bullish, because all my charts are going to turn bullish, because it's very objective in where support and resistance is placed. But until that happens, I'm going to be very cautious up here, and it looks very bear trappish to me. Okay, so it's been a slow month. I don't like it the way it's moving, but that's what it is. Like I said, there's going to be a war down here at support. Some of my charts, as we talked about last week, have put in support at the levels that we're in now, like Johnson & Johnson here. It never reached monthly resistance, but not only would weekly support be down here, it actually put in support down in this area too. So the strength is growing and growing on the bullish side, and I think that's going to bring more and more bullish activity into the market. And as soon as the buyers enter, I think that's where the rug gets pulled, at least for the first pullback. I mean, we haven't had a pullback yet. If you look at the angle of this ascent, this V bottom, this is a rare thing without any type of a pullback. So I'd be very concerned buying. That's just where I'm at. So that's my thoughts on the market. This video is a little bit shorter. We're going to try and keep them a little shorter to make it more consumable. And join me on the live. We go live once a week. I'll announce when I'm going live on Twitter. Follow me at CryptoBitJunky, and I'll let you know when we're going live, so you can join the chat. Tell me which charts you want me to look at. We'll look at them and analyze them. We've been doing it every week for I think the last 3 or 4 weeks, and last week's session was really, really good. We looked at a bunch of different charts and analyzed them, so it's pretty fun. So stay tuned for that. Like the video, please. Subscribe to the channel, and I hope you guys have a wonderful day in the market.